What is going on, everybody? My name's Christian Robert, and on this channel we talk stocks, personal finance, and wealth building. And today is a pretty interesting video. If you stick around to the end, I'm going to talk about something that I might potentially do that will not even about the channel, but it will affect the channel, but it will really change all of the things that I've been doing for the last 5 years. Obviously, you see the title, so stick around and we'll talk about that at the end. But let's do a Robinhood and M1 Finance update. I've kind of stayed off of YouTube for a while now because I've really been trying to figure out this big decision I'm trying to make. So before we jump into it, obviously you can see I hit over 400 subscribers without even updating or showing a video in a while. So thank you to all the new subscribers. Comment down below where you're finding my channel, if I'm being suggested to you, or if you're coming from another channel. I'd love to hear where you're from. But let's dive right in. So first we have my Robinhood portfolio. We're sitting at $5,583. Today I was up $154 or 2.85%. And in the last week I was up $109 or 2%. And in the last month, I was down 291% or 4.96%. And so Tesla is a big reason for the recent gains. If we go back to one day, 2.8% gain. You can see Tesla up 3% today. I can tell Robinhood's starting to update their platform and make it a little bit more better. So that's great to see. I know on the phone app, it'll show you your buying power like right under the graph. So I like that a lot too. I mostly use the app on the phone rather than this desktop version. But next we have VNQI. And this is interesting because I bought my first share at $60. And once I bought it, it's been a steady decline down. I believe it got into the $55 range. And I said this was going to be a really big holding of mine in the long term. And I wanted to average down every 50 cents or a dollar it dropped. But since it just kept declining, I've kind of held off for right now because a lot of people are saying when we're in this type of market, you don't want to be buying international holdings. So obviously this is a real estate international ETF. So I'll pump the brakes for right now, but I still want that international real estate exposure down the road. Next we have Nvidia. Nvidia has been doing really good since its earnings last week. Today it's up 7%. Skyworks has been all right lately. Activision I'm finally profitable on. Switch has been killing it. If we look at Switch, another thing is I'm thinking, so I'm not a short-term buy and sell guy, but I mean, I'm up 84% on this stock. And so I'm really struggling with a decision on when do I get out of this. Do I hold on for the long term, hoping that it becomes a dividend stock? It's got a very low dividend right now, but it could continue to grow that dividend, and it's something that I just hold for the very long term. Or do I say, okay, well, when it hits $17 or $20, then I'll get out? So I'm really struggling to figure out when it's time for me to get out of this. So comment down below what you guys think. If you were up 84% on a stock, would you be long gone? Or if you like the company, would you just sit tight for a while and just see what happens in the future? And another new position that I added was TPR, if my computer works. Another thing is my computer is really, really old, and so I've been having a lot of issues with it lately. But I bought one share Friday, $19.75. I'm already up 6%, so that's it's actually pretty annoying because when I buy a stock, I don't want it to go up right away, but the whole market has gone up, and the stock is Tapestry. I saw the Jeremy from Financial Education talk about this stock, and I did some quick research, and I said, you know what, I'm gonna do a really small position in it. So maybe get up to 5 or 10 shares on that if it drops a little bit. But then I have my Bank of America, Flower Foods, International Paper. Nothing really has changed. The only thing I've been trying to add to NRZ and Geo when it dips below a certain point. And I think that, oh no, and I added one new company, and that is Hanes Brands. I really like this company. I've had my eye on it for a while now. And this will be another one. It's not going to be a big position or anything because uh, I don't know. A lot of people seem to be very bearish on this, but I think it's a great company. Everybody knows what Hanes is. It's been around for a while. It's got a decent dividend. I bought it at $15.20 per share. I'm already down 9%, but if you look at the history of this, it has not been performing well. 1 year chart, it's down 25%. In a 5 year chart, it's down 44%. So obviously this is not a stock for everybody, but you know, I'm not going to get carried away with this because if you've been following my channel since the beginning, you know that I had a very, well, for me it was a pretty big holding of L Brands, and that's the company that owns Victoria's Secret and Pink, and I got burned pretty bad on that one. That was one of the very few times that I actually bought a stock and sold for a loss, so that still stings. So I'm not trying to get too crazy into retail. But then let's jump into my M1 portfolio. As you can see, my account has grown nicely lately. I'm up over $900. I'm at 908. All time, I'm up 6.26% or $24.81. All time dividends at 8.55. So those dividends are starting to come in. It's pretty exciting. In the last week, I'm up 0.36% or $3.24. The last week alone, I brought in $1.72. That's awesome. So, you know, I haven't been in it that long. I got in the M1 on January 17th. In the beginning, I was only in growth stocks. So in this past month, or no, more like 2 months or so, I've really made it a point to make this a lot about dividends as well. So I have this aggressive dividends pie. I've bumped up the allocation to Tesla. I really just want to get more shares of Tesla, especially when a recession comes, because I feel like Tesla is going to be one of those companies that people just love to hate on when the market is falling. I feel like you need to point the finger at a few companies, big time companies, when we're not necessarily a recession, but just in a big downturn. And so I want a big a big position built up in this when that time comes. I've surpassed 1 share in my M1, so I'm excited for that. I would like to get this above 2 grand or so. I have 10 shares in my Robinhood, so if I could get roughly 10 shares in here, I'd be really happy. But in a perfect world, I would love to get between 40 to 50 shares total. And, you know, I'm a long ways from that, but that's okay. And if we scroll down, I haven't really made any changes. I have United Technology. I've bumped everything down 1% so that I could increase my position, my percentage in Tesla. Verizon, 4% now. I'm at almost 1 share. Duke Energy, Costco, Lazy Retirement, which is just a few of the Vanguard ETFs, McDonald's, and then a bunch of banks. Nothing really has changed since my last update, so that's it for that. So let's get into the big title. So, if you follow my channel and you follow my net worth series, I've been very, very open and transparent about all of my finances and everything. So, if you follow that, you know that for my house, let's keep it very simple, round numbers. But for my house, I owe roughly $160,000 remaining on my house. Now, an opportunity has come up, and I don't want to say too much out of privacy, but there is a piece of land or a lot that is very, 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 very close to where I just built my house. And I can buy this lot and I can build the same exact house and move in there, selling my house I'm in now, obviously, and that would drastically reduce what I owe on my house. But the only way this works is if I basically drain my TD Ameritrade or my main portfolio, which has roughly 50,000 or a little less in it. So let's just say $50,000 in my stocks. So the only way this works is if I purchase that land and there's a lot of trees on it, I'd have to pay our guy to clear all the trees out. So that would roughly cost me $50,000 or all of my stocks. And in return, I would build the house. And in a perfect world, I would live in this house until that house is finished and then sell my house. Now, obviously, a lot can change from point A to point B. If it takes 6 months or 8 months for that to happen or longer, a lot can happen in the economy. But I am 90% sure that I should be able to walk away with at least a $50,000 profit when it's all said and done on current house. So simple math will show you that if I put in 50 and I make 50, I'm going to end up owing only $60,000 on my new house. So I've been having a really tough time deciding what to do because I have been growing my portfolio for so long, like 5 years, relentlessly. Every single week I'm contributing to it, and I'm on top of it. And so it's like my baby. I have 2 kids, but it's like one of my babies. I've worked very hard to grow this thing and nurture it, and it's very hard and stressful to pull the trigger and just sell it all. So I'm really struggling on which way to go. Obviously, either way, I'm fine. As far as what helps my net worth, probably doing it because I would drastically eliminate debt. And I think the lot, it's a bigger lot, so I think the value would go up a little bit compared to where I'm at now. But yeah, as you can see, I'm completely torn. I don't know which way to go. So yeah, I'm not gonna make a huge decision like that. I'm not gonna make it very lightly. I'm really gonna take my time. And if somebody goes out and buys the lot, then it's not meant to be, and I'm perfectly happy with where I'm at and all that. But it's a great opportunity for me to pay off my house. If I get down to $60,000, I'm 27 years old. I could realistically be in my early 30s and have no mortgage or no loan on my house, and it's a brand new house. So yeah, it's tough. Obviously, stocks are always going to be there. So even if I woke up and all of my stock money disappeared in all my accounts, I could start it up again, but I know how hard it is for those first few years. So, if you're a new investor, you just got to get through that beginning hump. It's so hard, but if you just keep going, you see that snowball starting to grow and grow and grow, especially if you're in it for the dividends like I am. So don't give up. It's a long-term game. And yeah, obviously I'm a builder. This is what we do. We build houses to sell. So I see the value in that. but I've really grown attached to that portfolio. But that's enough of a rant. Comment down below what you guys think. I'm curious what you decide. Obviously, I'm going to do what I feel is best for me, but I always appreciate your opinions and insights. So yeah, I don't know where the channel will go if I decide this. Obviously, I would still have my Robinhood and M1. So I could do a fun series on, building my brand new house and show you all the ins and outs of, what a builder goes through building a house or a homeowner or something. We can still keep the YouTube channel going, but it would definitely change what the heart of the channel is. So it's very tough, but I can't complain because there's worse things in life to stress about. But that is it for now. As always, if you haven't already, make sure you subscribe and like the video. It really helps the channel grow. I look forward to hearing from you guys, and until next time, I'll see you then.